Good day, everyone. Can we all hear me? Please, can someone confirm that they can hear me? Good afternoon. Hello, good afternoon, everyone.
Yes, I can hear you.
What are you doing there? I'm just scared. Let her not spoil something.
Toothbrush, pajamas, underpants.
Dun, dun, guys.
Okay. All right, please just give me 1 minute. I'll try to rectify this. All right, can we hear me now? Can we hear me now? Okay. All right, so I was saying, sorry about sorry, I was saying that we have come a long way in class. We started with the legal development of fintech class. That's in week one. And in week two, we talked about the commercial development of fintech. And today we'll be discussing fintech business models, profit models, and fintech sector spread. Our first mentor for today is our very, very wonderful mentor, is Mariam Hassan. Thank you so much, Mark, for joining. I think you're already on call. Thank you. We are so, so happy to have you in class. So Ms. Mariam Hassan is the lead payment strategy and partnership at Leatherback. She has more than experience in payments and collections, fintech business and digital platforms, profits, product development and strategy. She is in charge of strategic partnership, engagements, and payments platform employment at Leather Bar, giving her experience in business creation and growth. She is known to build processes that boost development of ideas into business ventures and meticulous in selecting strategic partners for the business. She's a skilled digital transformation, innovation
How
management.
were you able to make that woman say yesterday? Oh my God.
Sorry, you said? Okay, so I was saying, I'm still reading Mariam's profile, and she's a skilled digital transformation, innovation management, and strategy professional. She's an automobile enthusiast who enjoys traveling and reading. She's also very passionate about giving back by impacting knowledge through any means available, and is inspired by women in position of power. Thank you so much, Miss Mariam, for joining. Sorry about my network. Okay, so please, if your speaker is unmuted, please can you kindly mute? Okay, is it better now? So sorry, I was muted. Sorry about that. Okay, so not to waste any other time, our second mentor that we're expecting in class today is Mr. George. I don't think there will be any need to read Mr. George's profile, saying that we are very, 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 very much familiar with Mr. George. He has been with us in several sessions, I think 2 sessions already, and he's not yet here in class, but we hope that he'll be joining us shortly. Please, I would like to kindly ask the mentees to still inform other mentees that session has started and we'll be commencing shortly. Not to waste any time. Ms. Mariam is here with us on call. Thank you once again, ma'am, for joining. We're happy to have you in today's session. So what we'll be doing is that we'll be taking a presentation from you. According to our other program, we'll be taking a presentation from you for the next, let's say, 30 minutes, and then we'll take presentations from the mentees, and then after that, we'll go straight to feedback from you, and then we'll be taking questions. That will be the agenda for today. So please, ma'am, we'd like to just give you the floor for a 30 minutes presentation to the topic for today. Fintech business models, profit models, and fintech sectors. You're welcome.
Okay, Dennis. Thank you very much. Hi, everyone. Good afternoon. Can you guys hear me and see me?
Yes, we can.
Oh, okay. So I don't know if you can pull up my presentation.
Okay, I'll do that shortly.
Okay, so while you do that, I will just introduce myself. And so good afternoon, everyone. Good afternoon to all the mentees. My name is Mariam Hassan, and Dennis has just, read my profile. And So he said, like I said, my name is Mariam, and I'm happy to be here again, to take this topic, fintech business models and profit models, the fintech sector spread. So I know he read my profile, that I'm a leatherback, but I would like to say that I am currently taking a career break and spending my time traveling and exploring other opportunities within and outside payment. So I'm sure maybe in the next mentorship program, that profile will be updated. But yes, I used to lead the API business and handle payment strategy and partnerships at Leatherback. So thank you once again, JIIPCC, for the opportunity to be here again and mentoring for another quarter. So it's always a joy to have conversations around, the fintech industry. And the fintech business model is also a very interesting topic for me. Not just fintech, but business models in general. So there's no denying that and I wanted to say I thought my presentation was for 15 minutes because I heard you say I have to present for 30 minutes. But let's see, right? I would try and be quick as well, just in case Mr. George joins and he also wants to speak to the topic. So there's no denying that, the emergence of fintech has revolutionized the, financial industry. And it has also sort of helped to lower the cost of financial transactions. So, I guess that they're all creating business models that work today, in the industry. So looking at my presentation, can you please move to the next slide? Okay, so I'll just be covering fintech business models, the profit models, the sector spread, and what next for fintechs. And I also saw some of the questions that were sent over, which are also interesting questions. So the next slide, thank you. And I hope we're all doing great today, so I just thought to check in on everyone. So what is fintech business model? What is fintech and what is, business model? Fintech is just a short word for, financial technology. So it just means that, it's the meeting of finances with, technology, and how can technology sort of help to enhance, how we view financial services, today. So what are business models? Business models basically is what allows companies to create, deliver, and capture value, right? So it means that if today you have an idea to set up a fintech, how do you create, deliver, and capture value? Because that's the whole essence of having an idea that you want to develop. You want to be able to create value for people. You want to be able to deliver value and also capture value for them. Because if there is no value in whatever business model that you're coming up with, then it means that people will not key into your business and people will not be interested in buying whatever it is that you're selling, even if it's a fintech business. So fintech business models are generally designed to also do the same. So regardless of what industry you're in, regardless of whatever idea that you have or whatever product that you want to develop, more often than not, you come up with business models to be able to create, deliver, and capture value. So what separates the fintech business models really is just the definition of value that is different. So in this case, you want to deliver value through financial services, right? If it's an e-commerce product that you're developing, you want to be able to deliver value through the e-commerce products that you've developed, right? So that's just what differentiates one business model from the other business model. So people who develop e-commerce products, people who develop maybe into agri or, whatever industry they're in, whether it's oil and gas, whether it's energy, whether it's law, you develop business model, but the value that you're creating and delivering to people would be different. So in the financial technology space, you're delivering value through financial services, right? Whether it is in lending, whether it is in investment, whether it's in insurance, whether it's in remittance, whether it's in digital payments, right? So it means that you've developed a business model, in line with whatever aspects of the financial technology industry that you're looking to do. So what a business model does, it helps companies to describe, design, challenge, events, or pivot, right? So please, the next slide. So my next slide is just going to basically speak to what a business model canvas is, right? So I just thought that you all know. So regardless of whatever industry that you're looking to go in, Alexander Osterwalder's business model canvas is the most popular one that is being used, right, to develop the business model. Next slide. So the next slide sort of also has information around, what you're developing, whatever business it is that you're going into. So, for example, we're going into digital payments. You want to develop a digital payment platform, right? I think I kind of listed, the different types of maybe fintech industry that exists. You have digital payments, you have people in insurtech, people in investments and wealth tech, people in lending, so depending on what industry you're looking to go into, you develop a business model, you design a business model that is in line, with whichever of the financial services that you want to offer. So you first start with your customer segment. Now you're looking to go into payments, right? You have to be able to identify, the sector that you want to give value to, right? You want to create value to. Who is your target audience? Who is your target customer? You have to be able to identify it. So I looked at the presentation slides that, the mentees that was shared that the mentees developed. And I saw that you're talking about financial inclusion. So what that means is that, sorry, Ebio, please, can you mute your mic? Somebody's mic is unmuted. So now, if you're speaking about financial inclusion, it means that your target audience or your target customer segments is the financially excluded, right? So it means that you're looking at people who are unbanked or who are underbanked. So it means that you've identified the people in the industry that you're looking to offer these services to, right? If you're going into insurtech, right, it means that you're identifying a sector of the markets, right, that you think you want to be able to deliver your insurtech app to, or whatever product you're developing around the insurance industry. If you're developing an app for law, maybe for people to be able to maybe download contracts, contract or whatever. It means that you've identified a sector in the legal industry where you want to be able to solve a problem. So it means you have to first start with the customer segments that you're looking to target, that whatever problems you're trying to solve, who in the market are you solving that problem for? You have to be able to identify who your customer segment is, right, in developing business models. Now, in developing, when you've identified the sector, so it's the financially excluded, the unbanked, for example, that you're looking to target. So how do you relate with this sector, whatever it is that you're offering to them? If you're looking to develop an app, say a mobile money app, right, where you want people to be able to create mobile money wallets, fund. Okay, so you want to be able to develop mobile money wallets and you want people to be able to fund and carry out transactions on those wallets, right? How do you intend to deliver this service to these customers, right? So that's where the channels come in. So are you developing a mobile app? Are you developing a web platform, a web app? What is the means in which you need to deliver this service to the customers, right? So that's what your channels is. Now, customer relations, how do you intend to relate with these customers, right? Do you want to relate with them through phone calls? Do you want to relate with them one-on-one or face-to-face, right? Then a value proposition is the most important part of your business model. So today you have an idea to create an app where you're targeting the financially excluded, the underbanked. Now, what is the value in that? What is the value in that app that you're delivering to them? What is that problem that you've identified, right? What is your unique selling point? What differentiates, this financially excluded app that you're trying to develop, this mobile money app? What separates what you're developing from others, because you can't deny that you have competition in the market. You can't deny that there are other people who have also developed, services to be able to develop products to be able to render services to this same target market that you're looking at. So you need to be able to identify what your value proposition is. What value are you giving to them? Remember, I said the business model allows you to create, deliver, and give value to people. So what is this value? What differentiates you from other service providers who have also developed the same app, for this same target audience that you're looking at? Your value proposition is more or less like the core of your business. That's what will make people use you over a Paga, right? Or over any other provider who provides, the same mobile money wallet to financially excluded people. So your value proposition is the core of, what you offer. And it's also, so if you look at your value proposition, your customer relations, your customer segments, your channels, and your revenue, they're more or less like the value side of your business. So how are you giving value to people? Your revenue stream, you have to also be able to identify that. Now we go to the cost side. So the business model more or less is divided into two sides, the value side and the cost side. The value side is the value you're delivering to the customer. The cost side is what it will cost you to be able to deliver this product to, the underbanked or the unbanked. So you have your key partners, the different people you're going to be working with. You're going to definitely be working with the financial institutions, the traditional banks, right? Because you need to be able to leverage their APIs. APIs is how, systems connect. So if you're developing an app, you need an app that will help you, people carry out transactions, fund their wallets within your position, and the funds that are held within the app or for the customers also has to be held in the bank. So it means that the bank is one of your most important partners that you'll be working with, right? Your regulators would also be there because you need to be licensed, to offer financial services to people because you're dealing with people's funds. So your banks, your software providers, whoever you're going to be partnering with to be able to deliver this product to the market are your key partners. You have your key activities, which are the activities you're going to engage in delivering this product, which can be one, development of the app. So it means that you have to get software engineers, developers, you have to work, have maybe like a human resource department to be able to hire people. So these are your key resources. The key resources, the people you need to be able to develop this product, that you have in mind in, the fintech space. You also have the cost structure. What would it cost you to be able to deliver or develop this app, which is the channel in which you want to deliver this product to your customers? So what is the cost? Every line of costs that that comes to mind, you put it on your business model canvas. Now, when you have your cost side and you have your value side, by the time you come up with all your costs, it sort of gives you a sense of how you probably make money from this business, because you have to be able to understand the entirety of, the business to know what your profit models would be, which will be what I'll go into, shortly. So, and it also helps you to understand what your revenue stream would be, because you have to be able to look at your costs, what it will cost you to deliver this service to the customers. And by the time you take out your cost, it also gives you a sense of whether you'll be profitable or not. Now, this looks all fancy, this looks all good. It doesn't mean that when you develop your business model canvas, you immediately go to market and it's a win, right? So let's leave all the business model canvas, and after you've developed, the business model canvas, imputed all the 9 elements that I have, you look at your value side, you look at your cost side, you look at, all the risk, because even business models have risk, it has desirability risk. How certain are you that this product that you're developing, people would use it? Right? So you can have you can have your customer relations, everything in place, but it does not guarantee that when you take this mobile app, which is a mobile wallet you're developing for the underbanked or bank to the market, that people would accept it. So it means you have to be able to do a product idea validation. You have to validate the market. You have to check that there's a product market fit for this business that you've developed, even using your business model canvas, because it can look all nice, but doesn't mean that it will be accepted when you put it in the market, right? So it means you need to be able to check that this this business model that you've put together, people would accept it. And how do you do that? By probably creating prototypes. So this is more or less like you doing a product validation, because it's very important. Don't just make assumptions of the market. Don't make assumptions that when you develop this business model or this product, that it would sell. Sometimes it fails. Right, I'm sure you've heard of several fintech companies that start up and they go bankrupt, or they've run out of the VC money that they've been given, because they probably made a mistake along the way. They probably did not validate the market. They just assumed that this product will sell in the market. And yes, the product might sell in the beginning, but you also need to be able to understand to continue to iterate the process, right? As you go into the market, you hear customers' feedback, you take the feedback and you keep improving on the product. And sometimes you might even have to pivot from what your original product was. So you have to, how do you test the market? You have to probably create prototypes, right? Go into the market, whatever your sector is, you whatever means you think you can use to validate and check the pulse of the market if your product to be adopted. So if you're banking the unbanked, right, you need to have one-on-one conversation with them. If you develop a product survey, for example, a questionnaire, maybe the category of your target audience might not be able to fill that. So it might be a one-on-one conversation, get to understand what their problems are and their needs. So you're sure that you're solving a problem and not just assuming that there's a problem for the unbanked, right? We also assume that because most of us here are banked and are learned and, we're literate in terms of finances, that the number of banked in Nigeria is huge. You'll be surprised that more than 50% of Nigerians are unbanked. So yes, there's a problem there, but you need to be certain that the problem you're trying to solve exists in the market, right? So you can do a few tests here and there, then you keep building and iterating as you test the markets, right? So you can create a perfect business model in your mind. You assume that it's perfect, but if you don't test the market for a product fit, then, it's all a waste. So this is all fancy, like I said, but you have to be able to ensure that you test the desirability of your product. You check the viability as well, because the viability is you comparing your cost against your revenue. If your cost outweighs your revenue, then that's also a problem. You're going to run out of business in no time, right? Although some businesses, some fintechs also go into the market with the idea of first acquiring customers. So it means that they don't mind making a loss in their first or their second year or their third year, right? Because what they're trying to do is to gather data to acquire customers. They have a target of having 100,000 customers downloading their apps in the first 2 years. So they are not really concerned about the cost, right? So it means that in developing their own business model, what they intend to achieve is to first get customers before they start to make money. But you have to also check the viability of that, because if you're running on so much cost and not making revenue, then your business model is at risk, or whatever business it is, fintech that you're developing. You have to also be able to check the visibility of your business model, right? Checking your key partners, the activities, resources, your cost, everything, checking all of them against the adaptability of your business model. So is this business visible? Is this product visible? Is this app, this mobile money wallet app that I am developing, is it visible? Would it be accepted in the market, right? So business model, like I said, are almost the same everywhere. You just have to decide, who your target audience is, and when you determine that, and if you're developing a digital digital app to bank the unbanked, then you have to be able to check for all of this. So business models, like I will say again, are built around fintech business models, since that's what the focus is, built around digital payments, insurtech, wealth management, and all. People today also provide banking as a service, payment as a service, software as a service, digital banking. But it is very important that you check the viability of whatever products that you're putting into the market, right? If not, everything might fail. Can we go to the next slide? So now in developing this, you have to also be able to come up with your profit. Okay, so here I said exercise. So maybe the business model can be shared, right? The canvas, you can Google it online and you'll be able to download maybe a copy, just put in all the details. If you have an idea, a business idea, use the business model canvas to develop it. It just sort of gives you an idea of what this business will look like, after looking at all these different aspects. The next slide, please. So now in developing your fintech business model, like I said, two things. Some people develop fintechs, or businesses for two different reasons. Some are tilted towards, making profits, and for some, it could be data gathering, because data is like oil, and today they said oil is king, So data for some is just to gather data, have 100,000 downloads, and maybe sell the company, because sometimes data or the number of customers you have on your platform can actually be more valuable than even the money that you make, in the long run. So some fintechs can decide that I do not want to make money in my first 2 years. I just want to be able to acquire customers. And today you will hear I have, maybe for some fintech platforms, they have over 1 million subscribers on those platforms. It could be that their original business model was to acquire customers. And when they gotten to the point where they have enough customers, then they can now introduce fees. So some fintech business models is to make their platform free the first, second, or third year. So it means you carry out transactions for free. You download the app for free. Whatever you're doing within that app is for free. Then they eventually introduce, fees, to at least be able to recover. But you also have to be very careful when you're doing that. So for the fintech profit models, there are several models that are introduced for fintechs, and these profit models is really, how do I intend to make money from this business? So whether it's a digital banking app, or it is a lending app, or it is an investment app, how do I intend to make money, right? You need to be able to make money from the business. So you can introduce different profit models depending on what your business is about. So if you're into lending, for example, you're probably making money off, repayments. So you've put a certain percentage or rates on, whatever amounts that you're lending to your customers. And, in repaying, that a certain percentage comes to you. If you're offering a digital banking platform where customers fund and carry out transfers, you can decide to charge transaction fees. So today we all have banking apps. We carry out transfers on our apps, right? And your bank charges you. So you have there's this when you initiate transfers, you get maybe alerts telling you that there's a commission for that transfer that you've carried out, right? So it can be transaction fees, it can be commission on the fees, so it depends on whatever business that this fintech is into. They're able to introduce, a way that they think that they can make money out of that business. So there are various ranges of profit models, when it comes to fintechs, but the fintech just determines, and they determine, which of this fintech, these profit models that they will introduce, depending on, the kind of business that they do. So the next slide, please. Okay, so before I go into the sector spread, I'm just trying to, quickly round up, since I have about 15 minutes to speak. So like I said, this is just teaching you, what is in theory, what fintech business models, what a business model is, what profit models are, which is how a fintech makes money. But like I said, the most important thing is going into the markets, testing for these ideas, testing for what exists, and, ensuring that whatever fintech business model you have in mind to introduce to the market, that there is a need for that, product in the markets, and people are interested in using, whatever solution. There are a lot of fintechs out there today, so many of them out there, and they're almost doing the same thing. I recently read something around, does Africa or Nigeria need more fintechs, or do we instead need to find a way to introduce income enablement? Because the truth is, today there are a lot of lending apps, there are a lot of savings apps, there are a lot of investment apps out there in the market. But truly, if you look at it, do people have the financial capability, jobs or income, to be able to use these services? So I need to be able to have enough income to take care of my basic needs, to be able to even use an investment app. So why am I saving if I don't even have enough to take care of myself? Why am I saving if I don't have enough to take care of my basic needs, right? So truly, does Nigeria or Africa need the next investment app, lending app, savings app, when they don't have access to, enough income, that there's lack of disposable income for them to even save, because it's when people have enough income to save, have enough income to take care of their needs, that, they save. So maybe that's food for thought for us. Most Africans are unbanked because they lack access. Yes, we know. They are unbanked because the truth is most of them are unbanked because they even lack the income, right? So do we want to keep introducing new fintech products, or rather focus on how we can improve economy, right, for people to be able to get more income so that they can even use this fintech apps that are being, introduced? So in terms of sector spread, this is just, what I found on, Statista really, which is maybe is really the state of the industry. Fintech industry is rapidly expanding. It is expanding. Every now and then people are coming up with ideas on how to develop apps for people to save, how to develop apps for people to invest, to get insurance and all. So it's perhaps one of the most popular sectors in Nigeria today. Everywhere you hear fintech, and it receives majority of the funding, for startups at the moment. Even though I think that is beginning to decline because a lot of them are, packing up. The sector today has attracted well over 500 million USD and has had a huge impact in the economy. Yes, it has, but we know that with the current state of, the government and all, people are really just chasing how to make more money, to reduce poverty level. And today, according to Statista, the market's largest segment is obviously digital payments. Every now and then, people are starting payment companies today. And as of 2023, Nigeria approximately had about 217 fintech startups, reflecting a significant increase from the previous year. I still think that there are more problems to solve, which is really how people can, get more income to even be able to use, these fintech apps that are in the market. And Nigeria today gets funding, a lot of funding for fintech startups, but I personally feel is on the decline, really, because a lot of them are pivoting or packing up today. Dennis, next slide, please. I think this is, so what next for, for fintech today? Artificial intelligence, machine learning is really what is gaining ground. I know that the AI enthusiasts and all, a lot of them are working around governance for, AI. So AI has its own downside, but it also has its own, advantages, and it can also be used to help to further infiltrate and improve fintechs today. So in Nigeria, open banking, buy now, pay later is also, a thing. Contactless payments, people are trying to, see how we can improve on that, use contactless payments in Nigeria. Digital currencies are also looking, promising in the industry today. So I think that's the end of my presentation. So I'll probably let George speak. That's if he's already on the call. Thank you very much, everyone.
All right. Thank you so much, Ms. Mariam, for that very insightful presentation from you. We really did enjoy it. I think we have Mr. George on call. Thank you so much, Mr. George, for joining. Welcome, sir. Please, I would like to give you, I think about 15 to 20 minutes, sir, to just generally hear from you on your take for today's topic, fintech business models, profit models, and sector spread. You're welcome, Mr. George.
Thanks. Good day, everyone. I hope I'm audible. I hope you can hear me.
Yes, you can hear me.
I seem to be on the road these days a lot. Okay, thanks. I won't take time, actually. Probably this will be one of my shortest comments in the since I've been part of this. Largely in part that I think it's Mary. Am I correct? Have done a very beautiful job in trying to break down and digest several facets of business models as it regards to fintechs and of course this sector spread. And interestingly, I also touched on this in some way in the last session that we had, right? So I'll probably just take just 5 minutes, basically more like a summary, more of it, to just say um, fintechs are just like every other business, right? Um, in Yeah, I'm coming. In as much as they need to make money to survive, um, sustainability of any business stems from your ability to keep that business running, and the only way that you can keep that business running is by making money, right? If you're even using your personal savings, or you're raising funds, or you lend, someone borrowed you money, those income sources, those sources of funding are not they are not infinite, right? If you're raising money from investors, for example, there's just about how much money the investors will give to you, right? At a particular point in time, if you're taking a loan from a bank, there's just how much loan you can get, at a particular point in time or within a particular period. If you're using your personal saving, except your Dangote's child, I mean, at some point that will run out very quickly, right? Um, so the only true way to continue to survive as a business, right, is by making revenue, right? Is by paying customers to pay for your product, and in turn make revenue, and then gradually you make profit, right? There's a lot of difference between revenue and profit, right? Sometimes you could make revenue and at the same time you're making loss, right? I think I mentioned in my last session something around unit economics, right? You see people, some companies declared we made a revenue of 200 billion, right? We made a revenue of $10 million, right? But we made a loss of X amount of money of 1 million. So even though you're making revenue, right, you're also actually making loss, and at some point you need to be profitable, right? But at least you're making revenue. But when you're not making revenue at all, it's only a matter of time that you're going to have to shut down operations, because you won't be able to keep up your costs. It's at that time all the razzmatazz of I'm a co-founder, I'm a fintech, I'm a CEO, all those razzmatazz, right, completely go down, all right? When excuse my French, when shit hits the fans, right, everything goes down. So the primary thing as a fintech is you always have to think about, how do I make money? What is the model, that my product of fintech is built around to enable me to make money, right? And making money up to the point of covering my cost, right? The cost it takes me to keep this service running, right? So it is the long and short about it, right? No matter the nature or the type of model it is, right? You should always primarily think about, how would this translate into making money for me. For those that have played the acquisition game, I also touched about on this last week, right? Whereby you want to acquire customers, you want to be able to make money for a while and all that. People always say cash flow is hold on, let me call you guys back. Sorry, I'm just in a. I'll call you guys back now. I need to take a call. Yeah, afternoon. Yep.
Hello, Mr. George, are you with us? Okay. I think Mr. George is currently engaged right now. So I guess while we wait for him, I would just kindly like to ask the mentees to get set for their presentation. We'll be starting soon. Yeah, we'll be starting shortly. We'll be continuing with presentation after Mr. George is back and done. So group one and group two, please get ready for your presentation. I'll be taking that news please. Mr. George, are you with us, sir? All right, so that we do not waste so much time waiting for Mr. George, please can we have presentations from group one and group two? Maybe after we are done with presentation, if Mr. George can join us and just finish up his thoughts, then we'll take that. So please, group presenter for group one, if you are with us, please kindly go ahead, share your slides and start your presentation. You have 10 minutes for your presentation. Group presenter for group one, please, we're waiting for you. Can you kindly start your presentation? Okay.
Good afternoon, sir. Good afternoon.
Okay, good afternoon, Ruth. Good afternoon, Ruth. We can
Thank
hear
you,
you.
sir. So I'll just quickly share my slide screen now. Okay. Please, I just want to confirm. Can you see this slides?
It's currently sharing. It's not yet up. Yeah, it's up now.
Okay. Thank you very much. Okay. So my name is Adamu Ruth Oluiji, and I'll be making a presentation on behalf of Group 1. The topic is Fintech Adoption and Impact on Small and Medium Enterprises. What the presentation will be covering is Introduction, Understanding Fintech Adoption, Impact of Fintech Business Models on SMEs, Profitability and Financial Inclusion, Benefits of Fintech for SMEs, Challenges of Fintech Adoption, Regulatory Frameworks and Compliance Challenges, Case Studies, the Future of Fintech in SMEs, and then Conclusion and Recommendation. So I'll just quickly start with the introduction. All right, so Fintech has revolutionized business operations globally. Everything is changing, especially business and how business is done. We can see this even in our day-to-day transactions, like just going to the local market. A lot of things are changing. Most people don't like in the area of payment, most people don't even take cash along with them anymore. So like a lot of things are changing for business and for businesses. And then in Nigeria, SMEs are adopting fintech solutions to improve financial access, streamline their operations, and also drive growth. So the presentation today will explore fintech business models, their profitability, and the sector's role in SME transformation. Now, understanding, because as I said earlier, our topic is fintech adoption and impact on small and medium enterprises. So first of all, we need to understand what is fintech adoption. Before that, we'll have to define fintech. So fintech refers to innovative technology that improves financial services. It is the coming together of the provision of financial services with or and technology in such a way that technology now enables the provision of financial services. Now, fintech adoption is actually how are people adopting fintech? How are people trusting the system enough to come into it, to accept it? Yes, the acceptance of fintech services. Now, there are some key drivers for fintech adoption by SMEs. And then one of them is accessibility to finance. There is also efficiency in transactions, digital transformation, and then cost effectiveness. Now, examples of ways by which SMEs or generally people and organizations have adopted fintech is in the area of mobile banking, digital wallets, POS systems, and then micro lending platforms. I just want to say that I think in Nigeria, just like our mentor said, the most popular is in the area of mobile payments, and then I think following that is mobile lending, like lending of money. And these two things are core to SMEs and to businesses. They need fast transactions. They need fast transactions when they are going to pay. If they are going to pay, if they are the ones paying for, services, paying who they need to pay, and then payments are coming to them. Everything they need it to be done quickly and efficiently. And then another major concern of SMEs is accessibility to capital, how they are going to get money. And these two things are things that fintech, especially in Nigeria, has addressed massively. So impact of fintech business models on SMEs. Okay, first we have four major areas: digital payment, alternative financing, financial management, and then market expansion. In the first area, that's the area of digital payments, we have faster, secure transactions with lower cash reliance. I just want to be fast. Number two, we have alternative financing. So instead of going to traditional banks, which have a lot of things that people have to do, criteria to comply with, and a lot of processes, SMEs can now have alternative financing from these fintechs that are in operation. Another one is financial management. So they have tools as a result of fintech and technology. They have tools for bookkeeping, invoicing, and expense tracking. Market expansion. Now, this is one I want to explain because I think I really love it. A lot of people that around me that operate online businesses. So a student is in school and then she's selling a lot of things to people not only in that school environment but also outside. This is made possible because of fintech solutions, because of the merging of financial provision of financial services with technology. If fintech were not there, she will only be confined to people in, okay, talking about example, a student in school, she'll only be confined to the people around her. But because fintech has given the opportunity to SMEs to expand their reach, to expand their market, to be able to reach people that are not in their immediate location, she will have access to people that are not even around her. So that's for market expansion. These are the impacts of fintech business models on SMEs. Now, profitability and financial inclusion. So profit models for fintech include transaction fees. These are used by fintech such as Paytech, Flutterwaves, subscription models, and then commission-based revenue. So these are how they get profit. And then financial inclusion. So one of the things that fintech is doing is that it is bringing unbanked SMEs into the financial system. So in Nigeria, SMEs are they play a major role in our GDP, in our finances, in our economy. And then, but a lot of these SMEs are actually very informal. They are not so structured, SMEs or formal SMEs. So we have traders in the market. We have people who give out services, supply services. And then all of these people may not be actually banked. Most of them are unbanked, or a majority or a good number are unbanked. So fintech is bringing unbanked SMEs into the financial system. Now, creating easier access to credit. Yes. So people can just like fintech can get easy, they can easily get access to credit. And then it's also promoting cashless operations. Let me just be quick, very, very quick. Okay, moving on. Benefits of fintech for SMEs. Number one is cost reduction. They have lower, for example, let me not just use a specific example, I may be wrong, but these SM fintechs have lower transaction fees and operational costs. So if the SMEs are going to carry out mobile transactions, payments, and all of that, it will take a lesser amount of money than if they were to go through traditional institutions like banks. Then speed and convenience. Yes, there's greater speed with fintech. And then there's increased revenue because they have access to new markets through digital sales. I'm sorry about that noise. Enhanced security, safer than cash-based. It's safer than cash-based transactions. Yes, fintechs don't have to use so much of cash anymore because I said fintechs. SMEs don't have to use much of cash anymore because they can just make payments easily and fast. Access to capital. So as a result of loans, crowdfunding, and peer-to-peer lending, SMEs cannot have access to capital in a way that is more convenient, it is faster, they don't have to go through so much that the traditional banks would have given to them. Now, but aside these benefits, there are also challenges of fintech adoption by SMEs. And one of them is cybersecurity risks. So in the era of data and the amazing things that data can do for us, there is also the problem of cybersecurity risks because there can be data breaches, there can be fraud, and data is something that is very important. Our mentor was talking, and then she spoke about how the data that a company has can be more valuable than the revenue or the money that they have, or the business of that, the revenue of that business. So data is important, and if this data is prone to risks, there is a lot of problem, and that's actually one of the challenge of fintech. Is fintech adoption by SMEs. Then another one is lack of financial literacy. SMEs may struggle to understand digital financial tools. Yes, there is financial illiteracy. There's a problem of illiteracy as we know it, like just people being illiterate. But there's another aspect of that is that there is now financial illiteracy. So these services may not be able to really use them properly. Then regulatory uncertainty. The rules and all the regulations that are governing fintechs and all of that, most people don't know them. They are unaware of these rules. And then the changing of these rules can also hinder adoption. Cost of technology. This is a major problem because SMEs are small and medium scale enterprises. They may not have as much money, so much to invest in technology and all of that. So this is a problem for them. Internet connectivity issues is another thing because SMEs may be located in areas that don't have internet access, but that's particularly in rural areas. So this is a problem. If they are going to adopt fintech, they will need internet access. Now, where internet access is not there or is not adequate, it will be a very big problem, especially if they want to rely on fintech adoption. Just imagine that they have to make a payment, and then most of these apps have to use the internet, and then there is no internet access. It will be a big problem. Regulatory frameworks and compliance challenges. So fintech has key regulations or like regulatory bodies in Nigeria. That's the CBN, Central Bank of Nigeria. There are anti-money laundering policies, there's data protection laws. Now, but there are challenges as well. Regulatory ambiguity. I mentioned something about people not knowing these laws. Like the SMEs now, not just the fintechs, the SMEs, and then the people that are their customers. Most people don't know these laws. And then even if they know it's just so ambiguous, there are lots of them and all of that. Then high compliance cost. There's also a problem of balancing innovation with consumer protection. So we want to protect the data of consumers, and as well we want to innovate, we want to move forward and all of that. So there has to be a balance, and where this balance is not provided for, there will be challenges. I'll just quickly run through case studies and real world examples. So we're talking about SMEs and how they have adopted the use of fintech. So MoneyPoint provides affordable POS systems for SMEs. Their customers can make payments to them through others that have been provided. Then Paystack and Flutterwave provide seamless online payment integration. Carbon and Fair Money provide AI-powered collateral-free loans. And as I said, um, capital, credit, money is very, very important to fintechs. The future of fintech in SMEs. So the trends that are going on now and may even increase, not may, there's a high probability that it will. And money and AI is going to do a lot. Then blockchain, voice financing, then there's fintech, startups, banks, and regulators. There's going to be a lot of collaboration. I think there's already collaboration between this, because in the area of open banking and all that, there has to be collaboration. Then focus on cyber security and data privacy. A lot of changes has to be made, and hopefully will be made in regards to safety of data. In conclusion, fintech is reshaping SMEs through improved access to finance, operational efficiency, and market expansion. However, there are challenges like cybersecurity, regulation, financial illiteracy, and hopefully, not hopefully, I think I know this, things are going to get better. Recommendations: SMEs should embrace fintech tools tailored to their business needs. I feel like right now there just needs to be a lot of education for small and medium scale enterprises as to what fintech can do for their businesses if they embrace these tools massively. Then fintech providers should innovate while ensuring user friendliness, data security, and compliance. As innovation is going on, as a lot of fintechs startups are coming up and all of that, even in their as they try to work on these apps and all of that, they should ensure that innovation is balanced with data security, compliance with regulatory frameworks, and then friendliness, user friendliness. Then regulators now should create balanced, clear policies that support innovators and protect SMEs. The innovators, what they need is support, keep on innovating. But as well, there has to be a balance in the sense that SMEs have to be protected so that they don't lose their money and then you have to just close up and everything. Final thoughts. So we have a question. As fintech continues to evolve, and this is the question, as fintech continues to evolve and reshape SME operations, how can businesses, regulators, and innovators collaborate more effectively to drive sustainable growth, ensure financial inclusion, and then protect users against emerging risks? So that's the presentation from Group 1. Thank you very much.
All right, thank you very much, Ruth, for that wonderful presentation. Well done to you and your team for working on it and sharing your thoughts. So not to waste any time, Group 2, if you're ready with your presentation, we'll be taking presentation from you. Do we have the group presenter for Group 2?
Yes. Good afternoon, everyone.
Yes, good afternoon.
Good afternoon. My name is Ogenek Toka, and I am the presenter for Group 2. Our topic is very similar to the conversations that we've already been having, and specifically, because we have a lot of things that have been emphasized and repeated, and I think I have 10 minutes to do the presentation. I will just go to the major concerns that we were to tackle in our presentation. So, as a way of introduction, I'll just read what's in the slide. The rapid expansion of digital payment infrastructure and the increasing role of fintech innovations have transformed the global financial landscape. This presentation seeks to evaluate the accessibility of digital payment infrastructure in both urban and rural settings, the role of fintech firms in bridging financial gaps, and socioeconomic challenges related to fintech adoption. So like we've heard in our presentation, we have over 430 fintech companies or organizations in Nigeria, which is almost like a 70% increase from the last time. But this also has created over 20,000 jobs, and the adoption or the services that fintech organizations offer have affected or helped 580 plus organizations. But if you look at these numbers, it looks very positive. And then you look at the number of the population in Nigeria, we have over 200 million Nigerians in Nigeria. That's what the data says. So if you just do the simple math, it shows you that the adoption of fintech, or can we say 430 fintech companies or organizations, can provide enough services for 200 million Nigerians? The answer is no. Okay, so we now started looking at what are the challenges for what are the challenges that we face, and like I said, we're focusing on two major challenges. One of them is cybersecurity and privacy concerns that Nigerians have in the adoption of fintech, and also socioeconomic concerns. The last presenter for Group 2, she had mentioned a bit of cybersecurity concerns that we have in the adoption of fintech. However, I would just buttress her point. Many Nigerians are very skeptical because of the climate we live in. We've heard so much about scam, we've heard so much about the supposed Yahoo boys and whatnot. And for the average Nigerian, even the educated Nigerian living in an urban area in Nigeria, for example, Lagos, let's say on the island somewhere in Lagos, has that concern at the back of their mind in creating accounts or profiles on fintech platforms, because you want, there is a fear that, oh, what if this is a scam? What if this organization doesn't last long in the ecosystem? So not to talk of the average Nigerian who is uneducated and lives in the rural area in Nigeria. Most of the concerns, the specific concerns that Nigerians have when it comes to cybersecurity risk includes fraud and scam, then weak security protocols. So many people feel like the rapid growth of fintech is the cause of cybersecurity issues and cyber crimes, including phishing, identity theft, and fraudulent transactions. Many people feel like, oh, it's because of this, these many digital platforms. That's why people are smart and outsmarting people, even if we know factually that that's not true. But we can also acknowledge that it's the way the world works. The more innovation, the more those who want to take advantage, negative advantage of those innovations, come up. So aside from that, many fintech platforms have shown that they do not have, they have weak security protocols. So because of that, a lot of people have lost trust in the security infrastructures of fintech organizations. A few months ago, or should I say over a year ago, there was the whole issue of people who have their money in OPay having to see that their monies were taken out of OPay. They didn't authorize those transactions. They just saw that they lost some money. So those are the kind of stories that people hear, and then it discourages the spread, the advancement, the innovation in the fintech industry in terms of adoption by Nigerians. Then for the data privacy concerns, we all know that it was until sometime in 2023 that in Nigeria, the data protection regulation, there was an act made. So initially it was a regulation, and so what a regulation is not a binding document. Is more of a persuasive law, a law that says, okay, you should do this, you should do that. And until 2023, data protection had not been taken seriously in Nigeria. And since then, many fintech, let me give an example. For instance, the loan sharks, as we know them, we know that when you take a loan from one of these loan apps, you fill a form, you probably give consent some way for access to information of other people on your phone. For instance, to text messages, to contact addresses that you have on your phone. That creates a major privacy issues. I particularly have received messages years back that, you know, the annoying messages that you receive, this person is owing us money, and then I'm wondering, how did you have my contact? When did I sign as a guarantor for this person? Why are you contacting me? So those kind of concerns are what discourages even those in the urban and rural regions from wanting to adopt, because it's like, if I take a loan, for instance, I'm a very private person and I take a loan from, give an example, Fair Money or one of those places. The next thing, maybe someone at my office or my job will get a text message, a WhatsApp message with my picture on it saying that I'm a thief and I have not paid loan. So because of those concerns, those embarrassing tactics, those ways of breaching people's privacy, and not just the privacy of those who contacted or who directly transacted with the fintech organization, but those that are connected to them by virtue of the transaction that they've just gotten into. So those privacy concerns are why a whole lot of people have, you know, been reluctant to adopt fintech. And then most of the fintech organizations in Nigeria, or some of the, should I say, promoters of fintech, are not exactly showing that they're taking these concerns very seriously, these privacy concerns that people have. They've not shown to people transparently that although we render these services, we want to give you easy access to credit, we will not breach your privacy. So that's one of the challenges most people have in adopting fintech, whether in their businesses or for their personal use. Then the major other concern is socioeconomic concerns. Socioeconomic concerns, I would say, for one, a lot of people feel like ordinarily that there is unequal access, even to the general banking, traditional banking system. A lot of people feel, okay, maybe because I have 5,000 naira and this other person has 3 million naira in their account, so I'm treated unequally to them. So that creates a kind of resistance in the minds of people, especially those that are in the rural regions where there are less banks or they are totally unbanked. So while fintech has improved financial inclusion, rural areas and low-income groups often lack access to necessary digital infrastructure. So, like, for example, there are areas you go to in Nigeria. Let me give an example, somewhere like Ilaje, and then you probably cannot have internet connection in some places because by virtue of their location. And so these people will feel they have the resistance in their mind that if we put our money, maybe I come to town and I get network and I put my money in OPay and I go back to where I live, somewhere in a remote area, and I don't have access, something could happen to my funds that I have. So that's a reluctance that people have. Then digital literacy, the lack or should I say very little digital literacy that Nigerians have is also affecting the adoption of fintech innovations across Nigeria, as well as economic inequality. So many fintech companies, for instance, you know, we're very familiar with the payments, the fintech companies in payments, fintech companies in loans and giving off of credit. But there are other fintech organizations that, for instance, the payment gateways like the Paystack and co, and the wealth creation, those in wealth creation, for instance, I think Bamboo. Most of the time, people feel like you're charging us so much, or I don't understand what it is that you're saying you're trying to get me to do. For instance, fintech companies in insurance sector also will face those kind of challenges because people are reluctant to adopt because of the charges, it's too high, or I don't understand the economic implication of what I'm getting into. So that's also something that has limited the adoption of fintech in Nigeria. Then also high interest rates. So for instance, some of this credit fintech organization in credit system that give out loans and all of that, they usually have very high interest rates, sometimes up to 30%, depending on how you've decided to repay your loan. And that is also an hindrance for a lot of people, because we all understand the economic situation in Nigeria. We all know what the challenges are. And so it makes it a bit more difficult to want to take a loan, knowing that there is inflation today, and then you don't know the sources of income. For instance, those are salary earners. It usually doesn't increase proportionate to the amount of inflation that you are exposed to. So if you take a loan today that has 30% interest, by tomorrow, next year, next month, you will be paying what 30% is today is significantly less than what it will be tomorrow. So because of those uncertainties, many people are reluctant to adopt fintech. Also, cultural barriers. So many communities, in some communities, traditional financial practices and skepticism towards digital platforms may hinder fintech adoption. So we know of people who believe that generally they've not been able to even accept the traditional banking system because they believe cash in hand is better than, when you have your money in the bank and you don't know what's being done with it. So yeah, those are the two major challenges. I'll just run through the slides. I think I have spent almost the whole time. I'll just run through the slides and go down to this one. So some of the measures that can be put in place to help those with cybersecurity concerns for the adoption of fintech will be data encryption, which I'm sure most of the fintech organizations are already adopting. But then again, the problem is that a lot of people are not aware of this, and because of their lack of awareness, that these things, or they don't even understand what they mean by data encryption. So because of that digital illiteracy rather, many people do not understand that some of these fintech companies have this in place, and so they are not willing to adopt. Then multi-factor authentication, we all know what that means. It means where for instance you authorize a transaction and then you get an email and then you get a code in the email. If you are the person who's authorizing the transaction on the app, then you might be able to also because you have access to your email, get the code from your email and then finalize the transaction. But if you are not the person who authorized the transaction, of course you will not have access to the code, or you will see the code and you know that something is going on with your account. Then fraud detection and prevention systems can be put in place to also help people, to reassure users that their personal data will not be used to defraud them. Nobody will try to steal their identity because of security systems that are in place to prevent and to detect. Then incident response and disaster. So most times when cyber attacks happen, the general disposition of organizations is to do hush hush and make sure that people don't hear about it. Because it will give bad PR, and then people eventually get wind of it from informal means, where it is that they are hearing from a third party, is reported in a way that seems like these things are very disastrous, or they were not properly taken care of. Meanwhile, some of the times these things are properly handled. The perpetrators might be found, the loopholes might have been seen, but because organizations are not transparent in revealing to the public, or at least stakeholders in fintech organizations, to tell them that this is what has happened and this is how we've addressed it, most of the time it depletes the trust of the general citizenry in the fintech industry. So then there are also compliance standards, and sometimes too, when it comes to employee training and awareness, for instance, sometimes the employees do not have a good rap. And I'm just saying this for the sake of, so that we know that this, there is a chain effect for, like there's a long trail of effect that some of these simple things can cause. For instance, an employee makes a mistake, or he gets aware that, oh, there's an incident that has happened, and he's communicating it at home or in a friend group in a way that doesn't protect the integrity of the of the institution, it also gives a bad image to the fintech industry, and then it hinders or stops the growth. So for instance, to go into to innovate in the fintech space, might look at the plethora of laws. Hello, can you hear me?
Yes, we can hear you. Please go on.
Oh. So many people who would want to innovate in fintech might look at the laws. You have the CBN constantly issuing regulations, guidelines in the fintech sector. They look at all of these things, and sometimes it's like, too much regulation. I don't think I can comply. Why not innovate in some other sector and not in the fintech space? So both ways, it can be from within an already existing, fintech in the organization rather, or it could also be from a potential fintech organization that could have been, built or formed, and then we look at the plethora of regulation in that sector, and people are discouraged. Let me just go to the conclusion. I think I've touched on most of what we have on the slide, and I think the slides will be made available to everyone so we can look at it later on. All right. Sorry, please, can you still see my screen?
Yes, we can see your screen. Bingo.
Okay. I'm trying to read the conclusion. But in conclusion, those are the major points that we have to address to show why people have not maximized the adoption of fintech, and many stakeholders are discouraged. These are the major issues that affect the adoption of fintech, whether in rural and urban areas in Nigeria. Thank you very much.
All right,
That'll be all from me.
Thank you so much for that wonderful presentation. Well done to both groups for putting together their presentation and making presentations in class. So we'll be going back to our mentors. We'll start with Miss Mariam. Just to give feedback to the presentations, maybe anything you would like to highlight. And then we would have Mr. George also give his feedback, and then we take questions. So Ms. Mariam, please, can you share with us feedback from the presentation and any points you would like to highlight?
Okay, so thank you very much to both groups for your wonderful presentation and taking our time to, research on these topics, and also doing well in presenting presenting what you've put together, right? So I also noticed you had a lot of slides and less time to speak to it. So for the first presentation, like I said, it was pretty much okay. What I just would like to point out is you try to put graphs in between your presentation slides, which I don't think, was needed because they're not in line. It doesn't match the content of what you have in your presentation. So if you can't get maybe images that sort of speak to what your content is, then you might as well just leave them. Like the second presentation, they didn't have graphs or images. You make the use of the slides, because the graphs you had will be distracting because you weren't talking about numbers or anything, financial, but you had graphs in between. So maybe for next presentation or any other presentation you need to work on, just take them out if you're not speaking to anything that, relates to data or numbers. And if you want to have any sort of images in it, let it match the content of your presentation. Then I think in your slide 10, you talked about the different fintechs and what they offer. Then I noticed that for Flutter River Paystack, you mentioned something around payment integration. So if you're speaking on maybe the particular services that they offer and they're known for, it's more or less for payment gateway, not, I think you put integration or something like that. Then you might also want to carry us along more, because it looks like your fintech business models, you are speaking more specifically to SMEs, but I think there are some mix-ups around. I wasn't sure if it was SME you were speaking to or just fintechs in general. So you might want to also ensure that, when you're speaking to an audience like this, you're specific if you're speaking to SMEs, because SMEs is more or less like maybe the customer that uses a particular sector of business that uses the fintech product, right? So if you're speaking directly to SMEs and how the fintech services and collaboration with banks affect them, then, let it be that, because there was a mix of fintechs and SMEs. But overall, your presentation was great and good. And for the second presentation, I think you didn't have enough time to also look to speak to your entire presentation, because like you mentioned that some of what I've said and the first presentation has spoken to what you had, but I looked at it because I think it was one of the presentations that was shared with me earlier before this. And you might also want to follow through on working with a flow. So you were speaking about, fintechs business, then you jumped right into cybersecurity. So you didn't make your presentation sort of flow into each other. It looked like you're just here and there. I don't know how to put it, but I'm sure you understand what I mean. So if you're not here and I'm looking at your presentation without you having to speak to it, you want there to be a flow. So you're going from, say, business models to profit models to maybe challenges. Then let us know that, okay, maybe cybersecurity is a challenge to, fintech business or something. Then you just jumped right into cybersecurity. So I wasn't really sure what it was about until you spoke about it. So let there be a flow in your presentation. And I have a lot more to say, but because you didn't speak to all your presentation, it might be a bit difficult for people to understand the different slides that I wanted to make some to give feedback on. But overall, your presentation was great. So that's my feedback on both presentations.
All right, thank you so much, Ms. Mariam, for that wonderful feedback. Mr. George, please, would you have any feedback for our mentees? And if you can, also, we'd like for you to, we were speaking before you left, so maybe just finish the thoughts you were on before you were cut out of class.
Not much. Sorry, I had to get cut off earlier. Like I said, I was on the road, and I had to have the conversation with our wonderful police guys that were always trying to find every way to get some money out of you. But it's fine. For the presentation, I missed a good part of it, but just to say, I'm very sure that Mrs. Mariam has succinctly captured all that the mentees need to take note of, right? It's just for them to do well to make sure that they are able to take that in and reflect it in the next presentation. And then lastly, I don't know how much um, case study or localized example that was used. I'm always a fan of that. You don't need a lot of um, slides. Sometimes you don't need a lot of words to tell a story or to explain something. Sometimes just bringing it home, right, in the context that the people you are talking to understand, it would just send the message, or it would just pass the message, right? So less of the technical jargons and more of, right, using case studies, using examples that are localized, right, to just send home your presentation. And most of the time, that's what people will remember out of everything you say. It is those examples, those real life examples, those real life case studies that they can relate to. Most of the time is what they actually remember, from the presentation. So I just hope that we also adopt that if in any way it was missing in the slides. Other than that, I think good job for all the people that have put work together on that. Well done.
All right, thank you so much, Mr. George, for your feedback. So please, we'll be taking questions now. If you have any questions for our mentors, we'd like for you to raise your hand, indicate, and then, okay. Okay, please, if you have any polite questions, please you can raise your hand and then we'll take your question. Otherwise, you can send your questions into the chat box. I just pasted the questions that were asked while the groups make their research, the questions that they sent in for us. And I think we'll just be asking the mentors to help answer those questions. So the first question here is, what are the key challenges hindering the partnership between traditional financial institutions and fintech startups? Ms. Mariam, please, you want to have a go at this?
Okay, yeah, sure. So what are the key challenges hindering the partnership between traditional banks and fintech startups? I'll probably start with regulation. So today we all know that the banks are like highly regulated, and most of the business operations that they run is under strict regulation by the CBN, right? So what that means is that in the areas of partnerships and working with fintechs, they have to, follow due diligence or what is permissible by their license. But we know that today fintechs are more agile and very flexible, and most of them really lack the regulatory frameworks required to work with some of the banks. So that's, I think, one of the major challenges, working between the fintechs and the traditional banks is really around regulatory compliance. Another that comes to mind is also bureaucratic decision making. Today, banks, have hierarchy. They also have different ways in which they sign off on things, or so if you have to work with banks as a fintech where everything is like the exact opposites, they are agile, they're moving quickly, they're moving fast, they're trying to scale, they want to quickly integrate with banks, and banks on the other end are sort of sometimes slow. They also have adverse to risk, and they want to cross all the T's and dot all the I's before they move with these fintechs. So that's sometimes a challenge for some of these fintechs because of how quickly they move. Another will probably be around the systems. Fintechs today are largely API driven, and most of what their infrastructure and everything is cloud based. So we would say that they're more or less working with modern technology versus the bank's legacy systems, where it's sometimes difficult for them to integrate and scale. So that's another key challenge that I know fintechs also face in collaboration with traditional institutions today. Then in terms of, I think another area will also be cost and revenue. Today, banks want, they want long-term, look at how they can make money, look at the entire business and how they can make money from these fintechs. But fintechs, on the other hand, they are trying to provide a solution that is at the lowest cost, right? So it means that what you're trying to really work on is, provide these financial services to the last mile or to the customers at very low cost compared to what maybe the banks would offer. But if there's no agreement in terms of, what these fee structures would be, between what the bank offers you, because if the bank is offering you a particular, fee structure, you also have to look at what your numbers are and how you're able to charge these customers. Sometimes you'll have to maybe sort of place a certain margin or whatever the cost is. But how do you place a margin on that and still offer these services at a reduced cost to your customers? So that's another key challenge in terms of costs and, revenue. So long and short is how do we solve for this? Probably fintechs need to go and get, the required licenses for them to be able to offer the financial services that they offer to customers today. Because if you're dealing with money, you need to have the required license for that. Then another is the banks should also maybe see these fintechs as more of collaborators than, competition, and see how they can work hand in hand with them. And, that also translates to how whatever revenue model they come up with or fee structure, there's a win-win for both, parties, and maybe sort of improve on their, API standardization, or, their systems today that the API, the fintechs integrate with, because if they're largely API driven and cloud-based, then it will be difficult for them to integrate with the legacy systems if the bank don't try to scale. So I think that's most of what comes to mind in terms of the challenges and how we can solve for them.
All right, thank you so much, Ms. Mariam, for that wonderful answer to the question. I think I'll be asking Mr. George this next question, the other question here. And the question is, how can Nigerian fintech companies leverage emerging technologies such as blockchain, artificial intelligence, and open banking to create scalable solutions that address financial inclusion and enhance economic growth? Mr. George, are you still with us? Mr. George, are you with us, sir?
My network cut out. I'm with you now, yeah.
Oh, all right. So there's a question on the chat box for you. The question is, how can Nigerian fintech companies leverage emerging technologies such as blockchain, artificial intelligence, and open banking to create scalable solutions that address financial inclusion and enhance economic growth?
That's what I call a textbook question. Yeah. How can they leverage it? It's So it's a bit of an open-ended question, right? It's the function of what you want to build, right? Um, the technologies that you just mentioned, the blockchain, I think open banking, and then I think what was the third one you mentioned? Blockchain, open banking, or something? Is it AI?
Yes, AI.
Yeah.
Mention. AI. Am I audible?
Yes, you are, sir.
Yeah. So for open banking, it's very easy. Open banking basically is just whereby banks expose their APIs, right, publicly, for fintechs to be able to connect and use their APIs to build products, right, or provide services. So it's just a function of um, what kind of service do you want to provide, right? And that would determine what banking API that you need, right? If you want to, for example, be able to debit the customer's account because you need to recover your money, your loan from the guy, right? You need the bank to be exposed, their debit direct debit APIs, for example. If you want to be able to you want to give a customer a loan, but you want to access their transaction record or their transaction history to see that they qualify for the loan based on their cash flow, right? Or based on their transactions, right? You need the bank to expose an API to you that you can use and be able to check a customer's balance once the customer gives you authorization to check the account, right? So basically, open banking is just you being able. So that's why it's called open banking. Banks are opening their rails, right, for fintechs to access customer data, right? Expose APIs that fintechs can use to access customer data. And how can they leverage it? I mean, pretty simple, right? If you're able to be clear about what you want to build, you're able to check which of the banks. Some of them are still very rigid, and some of them are a bit more open these days, right, to such partnership. Be able to know which bank is a bit more open, to be able to get you that kind of partnership, to give you APIs to do some of these things that we mentioned about, right? Same thing with blockchain, just to understand exactly what do you want to build, what do you need the technology for, right? what exactly is the outcome you're trying to achieve, and that will determine how you use the technology, or what aspect of the technology that you use. There are so many facets of blockchain, whether it's whether it's on the NFT side, whether it's on the coin creating token side of things, right? There's so many facets of it, right? So whether it's on the metaverse side of things, so it depends on what exactly you want to build, will determine how you leverage these technologies. But these technologies are very much available, right, for you to actually leverage them, to build products, right, that would drive financial transaction as a fintech.
All right, sir. Thank you so much for.
I hope you heard me.
Yes, sir. We heard you. Sorry. I thought you had a network glitch, but we heard you, sir.
Yeah, all right.
Thank you so much, sir, for that wonderful answer. Okay, I think it's safe to say we've come to the end of today's session. But just before we go, right, for those who have who can turn on their videos, please would like, or we really appreciate if you are able to turn on your video. Let's take a quick screenshot of class, and then we would call it a day. So please, mentees in session, please can you kindly turn on your video? Thank you, Mr. B. I'm having issues calling your name. Sorry. Maybe after the class you can help me with the pronunciation of your name. Thank you very much. So please, can we have more mentees turn on their videos if that's going to be possible? Can we have more mentees turn on their video? Thank you, Favor. All right, so we've come to the end of today's session. Thank you so much for your attendance. Thank you so much for being present in class, to both mentees and mentors who have helped us run through today's topic. It has been very insightful for me, and I'm sure it has also been very insightful for the mentees as well. We still have, I think, a few more topics to go within the Fintech space, and I'm sure you've been able to learn a lot from our mentors. Thank you once again, Ms. Mariam and Mr. George, for sparing your time to be here with us in today's class. For the mentees, please do not forget to fill in the attendance. Do not forget to also share what we've learned in class on different social media platforms. You can tag our mentors as well as follow them on social media. And I'm sure that if you have any further questions that you'd like to ask, you can reach out to them and they will do well to respond to you. So once again, thank you very much. Goodbye, everyone, and please enjoy the rest of the day. All right, bye-bye.